By continuing to access this site, its content, or establishing any contact with Elliott Wave Live, you acknowledge having read and understand all disclaimers and risk disclosures. The following information described within this video or blog post contains information pertaining to hypothetical trades. These trades were not executed and are for educational or illustrative purposes only. Please read the CFTC Rule 4.41 that's on your screen, and keep in mind, by continuing to use this site, establishing any contact with its author, and or clicking on any of the links, you acknowledge having read and understand all the disclaimers and risk disclosures contained within my blog site. Hello, my name is Mike Sinibaldi, and welcome to this week's video edition of Herad on the Street. In this edition, I'm going to be taking a look at the following markets: the Emini S&P, the Euro, and the Nasdaq. The first market that I'm going to talk about is the Nasdaq, as it offers the clearest wave count and may provide a clue that we should consider when evaluating the S&P. From my Global Gains newsletter, the Nasdaq has completed Cycle Wave B and is in the early stages of a multi-year decline. Turning to the weekly chart level, the market has found support at 1179.75, the 0.618 retracement of Wave 5, and has bounced. At the daily chart level, from 1972.25, the minor Wave 1 low, price action is choppy and contains multiple overlaps and remains in a corrective price channel. From 21.25.75, I can count 5 waves up and done and make a case that Wave 2 is complete. However, looking at the 240-minute chart level of the all sessions contract, further upside potential exists. Should this interpretation be correct, I'll be closely watching 23.29 to 36 region for failures. Applying the same wave levels to the 240-minute daily session only chart also reveals interesting fib levels that I believe line up better than the previous all sessions chart, i.e., these levels form more levels of confluence and a higher probability to look for a Wave 2 termination point. Take notice of the area surrounding 23.45 to 49, where Wave Y equals Wave W at 23.45, and Wave C parentheses equals a 1.618 multiple of Wave A parentheses at 23.45.25, and finally, Wave 2 equals a 0.786 multiple of Wave 1. Additional evidence that Wave 2 has more upside potential is the fact that Wave Y has exceeded the 0.618 time relationship of Wave W, and the next time relationship is where Wave Y would equal Wave W to complete around September 23rd and 1:30 p.m. plus or minus 4 hours. The next market that I'm going to take a look at is the E-mini S&P. At the monthly chart level, the 2007-2011 analogy appears to now be somewhat questionable, in that it bears to ask whether Wave 1 is already complete and we are now working Wave 2 instead of Wave 4 at the daily chart level. With half a month remaining, it's too early to call for a breakdown of the analogy. It's the close of the bar that counts, but remember that analogies can only take us so far before they break down. This analogy has served us well since July 17th, and there's no reason to abandon it at this juncture. One reason not to abandon the analogy is that the weekly chart level shows that the 10-week or 50-day equivalent simple moving average was formidable resistance in both 2007 and maybe in 2011. As of last week's close, 1215 was tested, and I'll be watching how price reacts to this level. On inspection of the daily chart level, we can more closely see price action as it approaches the 50-period simple moving average. And there are 2 wave counts that I would like to discuss. First, we cannot dismiss the fact that Wave 5 down is still underway as Wave 2 circle is unfolding in an expanded flat correction. A, B, C. A break of 1229.75 would eliminate this view and open the door for the alternative wave labeling that is more consistent with the Nasdaq chart analysis, where Wave 1 is complete and a corrective move is unfolding in a 335 that would possibly test the neckline. And finally, the triangle interpretation is still alive. Breaks above the wave C circle high of 1214.50 negates this view. Additional interpretations are available, but they do not represent the highest probability counts at this time. Should they become relevant, I'll discuss them at length. The final market that I'll be discussing in this week's edition of Herad on the Street is the euro. At the weekly chart level, I'm working a WXY, or as an alternate, a triangle interpretation. Dropping down a time frame, you can see the subdivisions of wave A parentheses and the target levels for completion. The higher percentage play being 1.3429 to 39. And finally, a print above the wave 4 high of 1.3925 negates this view that a fifth wave is now underway. I hope you found this video helpful, and best of trading.